All right, so it'll all depend on what kind of view the Supreme Court eventually takes, but this is an incremental development and an important one at that. Raj, thanks so much. Let's get back to earnings. Jubilant FoodWorks, the numbers are flashing across your screen. This was an important set of numbers that were being tracked. It's a well-tracked stock. What seems to have come through is more or less in line with expectations. PAT is coming in at about 32.3 crore. The estimate that we had put out was about 33.2 crore. So that's still a near about 40% increase compared to last year's number, which was about 23 odd crore. If you look at the sales, you've got a 314 crore final figure on sales. The estimate was about 310. So again, you've got a fairly decent jump of about 42 odd percent on the sales side as well. So both of those numbers seem like they are in line with expectations. The stock's not reacting right now. A couple of the finer points that you'd have to watch for once the exact and the detailed release comes through, and what management seems to say about same-store sales, whether they will be able to maintain the kind of pace that has been seen. 25 to 26% is what was being expected, and also on the gross margin side, are they seeing those margins hold steady near about 74 odd percent? They've taken price hikes, so that perhaps has negated any pressure that they would have on account of input prices. So unless there's some unforeseen element there, margins should probably be more or less steady. There is some talk about the capex that would be needed in rolling out the Dunkin' Donuts brand. So if there is anything out of the ordinary there, we'll bring it to you. But so far so good as far as Jubilant FoodWorks is concerned. The stock's trading where it was, about 1.5% lower, and the numbers coming in more or less in line with expectations. Let me flip over to another set of earnings, and this is Ashok Leyland.